This PowerPoint deals with the basics of fixed assets or plant property equipment, all names for the same thing. This is just going to talk about buying and selling. I'm going to be opening a restaurant, and so I contract to buy a building for 500, and then it costs me another 100,000 to make it ready for use. To make life easy, I pay the whole 600,000 on the date I open the restaurant. The journal entry is the same thing you'd do if I didn't confuse you. Debit building, credit cash. The only thing interesting here is that the value of the building, the cost of the building, is whatever it took you to make that ready to use. So if you had to repave the parking lot or redo the kitchen or upgrade the plumbing and the electric, that all goes into the cost of the building. We're then going to depreciate it. This is just like what you did when we did adjusting journal entries. Depreciation expense, accumulated depreciation for 30. Then the question is, what happens when you decide to sell the building? In this first example, we're going to sell our building for $395,000, and I made it easy. It's on January 1, year 6, so that means you've depreciated it for 5 years. If I went to my general ledger, this is what I'd show. The building never changes. You leave that at that original cost, but the accumulated depreciation, we would have made that journal entry 5 times. We have to figure out then really what happens with that sale. So my sales price is $395. Then you have to figure out the book value or the carrying value. And that's just your original cost less your accumulated depreciation gives you a book value of $450. I've got a minus sign there because you take that book value and compare it to your sales price to figure out if you have a gain or a loss. In our case, we have a loss because we have a book value of $450, but we only sold it for $395. So we lost $55,000 relative to our book value. Once you've got all that, you just slam all those numbers into a journal entry. So the cash, always start with the easiest one first. Cash, we got $395. We need to get rid of that $600 for the building. We need to get rid of that $150 in accumulated depreciation. So the loss must be a debit to make that balance. But more importantly, a loss is like an expense, so it has a debit balance. Gain is like revenue, so it would be a credit. That takes us to a gain then. So we talked a little bit about that. All I'm changing here is now I'm selling the building for $495 instead of $395. My general ledger looks exactly the same, so I just have to calculate the gain or loss. Start with the selling price, find the book value, it's the same $450, subtract that, and now we have something with a book value we sold for $495, so that seems like a gain, and it is. The nice thing is the journal entry will work itself out. The cash now, all I've changed is that $495, the accumulated depreciation and building are the same, but now to make that balance, we need something on the credit side, and that's our $45,000 gain. That's all there is to it. Meet my dog Jojo with a goofy hat on and try some problems and see if that works for you.